Hidden taxes in retirement, cryptocurrency making its way into everybody's life, and clients being forced to retire earlier than they wanted to. All that and more on today's episode of Elevate Your Wealth.
And now, Elevate Your Wealth with Mark Stimpson and Casey Elkins.
Welcome into Elevate Your Wealth. Your hosts are Mark Stimpson, Casey Elkins, Craig Roth, and Steve O'Flynn. You can find them right here in Seattle at Elevated Financial Management. Again, this is all about getting you prepared for your retirement. And they've got 90 plus years of experience between the four certified financial fiduciaries. And again, it's all about being proactive. Again, I'm Morgan Patrick. A pleasure to be on. We're going to get into a whole bunch of things. But real quickly, just catch us up on the week. Casey, you're first.
You know, it's been a great week. I actually want to rewind a little bit. I had something really cool happen that I forgot to share last week. And so a client of mine retired. He was a firefighter for 30-something years. Awesome. I don't remember the exact number, but just a great guy. And he actually invited me to his last shift. And so I got to go there to be for his last shift, just when they did the bells, and his family was there and friends. It was really, really cool. It was a big honor. And so it was really nice to hear all the wonderful things that the employees there had to say as coworkers. Very unique experience. I'll say I haven't been invited to something like that before, so that was cool. And then I actually got invited to his retirement party too, with the family and everything. So it was really a privilege. It was really exciting. I'd count him as a family friend, absolutely. And just a really cool experience. And to be able to see him, you know, he's a young person to be retiring, but he's worked so hard for the pension that he's going to have. And the reality is it's going to be a phenomenal pension. And that's really what's allowing him to retire early. And so to get to be a part of that story was really a privilege and an honor for me, to play the little part that I get to play to make that happen. But all the hard work that he's put in over the years, and to just kind of really see the family sail off into the sunset, right? I mean, they're going to have just a great time in retirement. And again, very humbling and exciting thing for me to be a part of.
Well, and just to add to that, I think we get so caught up in our own lives, and we hear a lot about first responders and just how special they are, because they do commit their lives to this job. But to go to a ceremony like that, it really hits home just how important they are to the community, to their team members. And again, what a special thing to be a part of. Mark, let's go to you. How was the week?
Yeah, it was good. We're big into watching football right now, the real football anyway. Steve's going to say something about that, but we want to put pads on, right? So the Seahawks are coming up, and we're looking forward to seeing them in the Super Bowl for sure. So right now, and there's a little bit of a big golf tournament coming up in a few weeks. In fact, I was just talking to our back office about going down to Phoenix for the Waste Management, which is always a monster fun event. So we've got that to look forward to. But again, our goal here at Elevated is just to help people make their retirement dreams come true and not to just turn out to be a fairy tale. So we're so excited about this week's show. And we just want to thank our listeners, too, that listen every week, because this is why we do the show that we do. We are making a difference in our clients' lives, and we just want to say thank you to everyone that's listening, and also to those that have become clients, basically because of this show. We've been doing this for several years now with Morgan, and I just want to thank all of our listeners, because you really are what drives this show, and we're just, as Casey just mentioned, to be a small part in our clients' lives and making their retirement a reality has been a special thing for us, and we truly love what we do here.
Well, let me just say that you mentioned I guess it was a phrase. You said real football. I'm a Cowboys fan. What is that?
Yeah, exactly. You meant to say cowgirls, I know.
Yeah, we'll eventually have our revenge in some form or fashion. It might not be while I'm still here, but anyway.
Exactly.
The Cowboys continue to struggle, but Seattle having a fantastic year. Well, gentlemen, we get into the latest when it comes to retirement, the hottest articles that come out. A lot of people concerned about retirement. So we're going to start off. We've got, it looks like Eileen Slatko contributes quite a bit to Rethinking 65, and her article, Hidden Taxes in Retirement. The tax part of this is going to be something that everybody needs to at least have on their front page when it comes to planning. Casey, you guys picked the article. Let's just dive in.
Yeah, I'll let the other guys chime in on the specifics, but just from a high level perspective, hidden taxes in retirement, and we could even just rephrase that to taxes in retirement, is something that you've got to be prepared for. I think the easiest way to think about this is if you've got a 401k or an IRA, which is where most people save for retirement, you've got a silent partner in that account, right? And so you're going to have to pay taxes on that money. If you've got $1 million in your 401k, not all million of that is yours, right? And so how to minimize the taxes, how to be efficient. Now you'll notice I'm not saying how to eliminate the taxes because that's illegal and that's not what we do, right? But tax mitigation is very important piece to this puzzle. And it isn't just as simple as, well, I've got this retirement account, I'm going to start taking distributions and hope that the market continues to grow. There's a tremendous amount more to it than that. And we need to, again, make sure that, well, if you have other account types, it might be more efficient to take money from those other accounts and wait to take it from a 401k or an IRA or a 403b or 457, whatever account type you have. It may make sense in your circumstance to actually take it from there first, or to start doing Roth conversions, or, there's a lot of pieces to this. And, I think that something that's really interesting in this article, and I'm glad it brings it up, is what's called net investment income tax. That gets missed a lot. And it's a really big deal, especially in the area that we live in, because the amount of folks that come in that have stock options from their company, Microsoft, Amazon, Costco, Google, any of the big companies in the area, if you are going to start liquidating those funds, you have to be cautious about how much you do at one time, because it isn't just about the taxes that you're going to pay from a long-term capital gains. It's also about that additional add-on of net investment income or Washington state gains. So, these things all compound. And, actually in a meeting this morning, Craig said something that I really appreciated about how, the four of us here as advisors in this room, we work really hard to talk through taxes and help people understand them. And yet, at the end of the day, we're very proud that we have Kelvin, our CPA, on staff, because it's always valuable to defer to Kelvin and say, Kelvin, what do you see when you see this? Because he does just kind of bring a different light to it. And that's the whole reason that he's on staff here at Elevated. He's not a consultant. He's not a third party. He is an employee of Elevated to make sure that we get this tax planning piece correct for every retirement plan that we put together.
Yeah, and thank goodness Kelvin is here. I tell people, when we build a plan, we understand the tax implications of the various accounts and the timing of distributions, but when it comes to tax advice, we are not accountants. So I am so grateful that Kelvin is here to give us that view, and you mentioned the net investment income tax, Casey, at 3.8%, considering the highest brackets at 37, that's another 10% in total taxes.
Yeah. So one of the things that I just want to touch on briefly from a tax perspective is the difference between MAGI and AGI, right? Adjusted gross income. That's literally line 11 on our 1040 forms, the AGI, right? And that's going to be the basic income calculation. It's going to be used to figure out taxes after deduction. But it's MAGI that a lot of people don't understand enough about that, because that is really the number. And that is not on our tax return. There's a separate line for that. But I think it's important because it's the MAGI number that is used to do different calculations. And one of the big one is, are you going to be taxed on your Social Security? I should say part of Social Security being the Medicare piece, right? Do you have additional premium for your Part B? So again, understanding the difference between MAGI and adjusted AGI is an important thing to understand when it comes to the tax planning we do here.
Yeah, and I've got another thing to add here. It's interesting that we have to kind of plan, and it says here, for the granddaddy of all hidden taxes, and that's RMDs, required minimum distributions. And we do have to educate our clients, even in their 50s and 60s that this is something that's going to happen. It is a kind of a tax time bomb that's going to begin in the 70s. So maybe we can go through RMDs just briefly.
Yeah, that is a really important piece, and I think maybe we're bumping up against a time stop here. So maybe let's touch on the RMDs when we come back, Steve. Morgan, I know you'll have the phone number here in just a second for those that are listening, but this is really your opportunity. If you've been listening to the show for some time, or you're a first-time listener, in either circumstance, having a plan for retirement is what's going to make you successful. That plan should consist of planning for taxes to make sure that taxes aren't happening to you, but rather that you're in the driver's seat as this plays out. In addition to that, what type of risk are you taking? Are you heavily concentrated in a company stock? Even though it has done well, does that mean that's the right move for your retirement moving forward? So there's a lot of pieces to this. This is your opportunity to get that plan. Don't hesitate. Pick up the phone and give us a call. It's completely complimentary, no obligation. We will design a plan custom tailored to you. Again, don't hesitate. Give us a shout now.
All right, it's complimentary. Again, no obligation to become a client. And again, you can get on the calendar with Elevated Financial Management simply by calling 866-668-3625. That's 866-668-3625. If you've got questions about where you are, and a lot of you have done the heavy lifting. You've saved, you put your money away, but now what? You need a plan. We're focusing in early portion of the show on the hidden taxes that could be out there waiting for you. You want to make sure you pay what you owe, but don't overpay. All right, 866-668-3625. That's 866-668-3625. We've got the appointments. They're complimentary. Again, no obligation at Elevated Financial Management. 866-668-3625. We've got more Elevate Your Wealth coming up. Welcome back in to Elevate Your Wealth, hosted by Mark Stimpson, Casey Elkins, Craig Roth, and Steve O'Flynn. Again, you can find them at Elevated Financial Management right here in Seattle. Check out the website and treat it as a resource, efmnw.com, all letters, efmnw.com. Links to the TV show, our radio show in podcast form. Solid information on retirement planning, background information on the team, and they are growing to serve Seattle even better. Again, 90-plus years of experience on this show when it comes to planning, certified financial fiduciaries. I'm Morgan Patrick. We started off the program, guys, talking about hidden taxes in retirement article. Eileen Slatko giving this to us, and we want to hit one more thing on taxes before we shift gears, and that's the RMD. So we bring in Steve O'Flynn, and Steve, this is important because you talk about some hidden taxes. You got to be careful here.
Yeah, and we're talking about qualified accounts. So to remind everybody, traditional IRA, 401k, 403b, all these qualified accounts at some point, and especially in your 70s, the IRS force you to take distributions on those accounts. We do have a website, a resource to calculate what your potential taxes could be if you don't take action, and then what you could save if you do take action. So the website, taxbillseattle.com. You enter the qualified amounts, and then it will tell you pretty much how much you're going to pay in taxes. And why do we kind of raise it even for those people that aren't in their 70s? Because if we're proactive, we can help eliminate some of that partnership with the IRS. Of your $1 million, you could be paying as much as 25%. So we want to make sure as much of your money stays in your pocket and for your beneficiaries too.
Yeah, absolutely. That's a great point, Steve. It really does come down to runway, right? And somebody who's 65 has a lot more runway before they get to required minimum distribution than somebody who's 72, right? So it's really just about giving yourself enough time to plan and make positive impact. So yeah, wonderful point.
Thank you.
Well, and just having, a strong team that's been put together at Elevated Financial Management to serve you better. Look, have a plan, come in. If you're sitting on a portfolio, folks, that's not a plan. It's a hit and hope scenario. You got to make sure you've got enough money that's going to last you through your retirement and at the lifestyle that you want. Again, to grab one of our complimentary appointments, you can call at any time, 866-668-3625. That's 866-668-3625. There's no cost to the appointment, and you're not obligated to become a client. But if you've got questions, and we've been focusing in on the tax part of this because there's some hidden stuff out there you got to be aware of, grab one of the appointments, 866-668-3625. All right, it's the hot topic. Everybody's chewing on this one, so we'll just throw it at you. Crypto biz. Wall Street moves on-chain as banks embrace digital assets. This has kind of been shaky, iffy, but it seems like it's gaining speed and legitimacy.
Yeah, the cryptocurrency piece, right? It's been a conversation for quite a while now. And we all hear the kind of the buzz about it, right? And there's been naysayers about cryptocurrency from the beginning, and there still are. But you know what? There's a lot of institutional money in cryptocurrency now, and it is just flooding in at the moment. And to have these trusts and things like that are now listed on exchanges, and you have banks looking at stable coins and other cryptocurrencies and inventing their own cryptocurrencies to use, it's part of everybody's future, right? And so whether you're a fan or not, I think the reality is now is the time to get educated about what it really is and how it could impact you, because it's something that you're probably not going to be able to get away from in the next 5 to 10 years. It's going to be a bigger part of our lives, and it's something that we have to plan for.
I think that's an important point because it's here.
Yeah,
that's it, right? And when you really think about it, when a big player like J.P. Morgan is now in the mix, and they have said, okay, we questioned this for a long time, but not anymore. They are in the world for sure now, and they're going to make crypto a big part of their banking business.
You mentioned J.P. Morgan, and I remember working with Jamie Dimon, who I have great respect for. Now the chairman has been sometime CEO of J.P. Morgan. When I worked for him for 10 years at Smith Barney, and cryptocurrencies first came out, he made a statement like, if any of our traders trade in cryptocurrency, he'll be fired. Right? He didn't want anything to do with it. He said it was not a real asset and all that. And it wasn't just him either. It was a very commonly held belief.
Had to recant that one.
Right, exactly. Now there's a JP Morgan coin, right? and it's moving to the Canton network. Right? And another piece I found interesting in the article was the Bank America bit about wealth advisors who work for Bank America, which not everybody may know now is Merrill Lynch, and they are now cleared to recommend Bitcoin ETFs. Now, we're not talking about whether Bitcoin or any other cryptocurrency is right for you or for any other particular client. It's really just another factor in the decision-making about what kind of plan works for each person. And considering that there are literally dozens and dozens and dozens of different cryptocurrency coins, it's important to find out whether and how it might fit for you.
And we're seeing it more and more in portfolios that we look at. We're seeing exposure to crypto even as a small percent, but it's just becoming the standard now.
It really is, yeah. And, I appreciate what you said, Craig, because it's true. We're not here recommending cryptocurrency. No. We're not here recommending Bitcoin. As a matter of fact, if you come into our office, if you're a client, you're listening to the show, you'll know that we have never once recommended cryptocurrency for your retirement portfolio. And the simple answer to that is it's not that we're saying it isn't right. It actually is now getting to the point where it can have more of a place in your retirement. And it is something that we're looking at integrating as a small percentage because it's still very volatile, right? And so that being said, retirement planning is about lessening volatility, not about increasing it. And so until your plan has the income that it needs, volatility is not your friend. It's quite the opposite. And so it does come down to the right type of planning. But what this article mentions and what I think our overall point is today is simply that cryptocurrency, at least at the moment, appears to be here to stay. And so don't let it be the boogeyman in the closet and continue to turn a blind eye to something that might be valuable to you, or at the minimum might be forced into your life at some point here. That would be like turning a blind eye to credit cards years ago. Everybody's got a credit card now, right? Could you imagine trying to live in the world that we live in without a credit or a debit card? You couldn't get through. It just wouldn't work, right? And so that being said, cryptocurrency, very similar, where it's becoming, and even quicker than credit ever did, it's becoming a bigger part of everybody's day-to-day life.
Yeah, how many of us write business checks anymore? We're doing good if we write one or two a year now, and that's all we did. So crypto is here, I believe, to stay. And we talked about J.P. Morgan in Bank of America. Barclays, we've had the privilege to go to the Barclays trading floor in New York, and they have now made a major investment in a crypto platform themselves. So this is not going away, and anybody that still wants to be a naysayer probably isn't educating themselves enough to really understand the power and how successful individuals can be. Now, we're not recommending this as an investment option. In fact, we don't really recommend crypto in the office for clients, but clients that have it, some of our wealthiest clients that we know in our office have a lot of crypto, right? And they've made a fortune with it. We're not saying to do that. That's the point. We're not recommending it, but again, it could be a powerful tool if it's used in the right way.
Well, you guys say it every week. I mean, knowledge is power. Educate yourself on all the different potential puzzle pieces that could go into your overall retirement plan. And I tell you, with the names that we talked about today, the legitimacy of Bitcoin, it's becoming more solid. A couple of years ago, 3-4 years ago, people were like, what is this? We need to find out more about it. And that education is happening, and you're seeing a lot of investment in crypto. And it might be something to consider, but you guys have all said it. You're not recommending it, but it could be a conversation piece to what goes into your overall plan, potentially. It's all about whether or not it's a good fit for your situation.
Right. And I was just thinking how many of us went from a typewriter to a keyboard, right? And it can be, and that took a while to make that adjustment, right?
You speak for yourself. I'm still using a typewriter over here, okay? And it's never steered me wrong. I got that little ribbon and my whiteout. I'm having a great time. Yeah.
So the bottom line is, if you've been thinking maybe about crypto, or you have questions about it, or you're worried about your income, is it going to be guaranteed for the life of your retirement cycle? Are you worried about, what do I do with Medicare? So if you've saved $250,000 or more, please give us a call. Let us have a conversation. You're going to keep your checkbook at home, and that's all we're going to do. What you're hearing today is what it's like when you come into our office. So please pick up the phone, give us a call, and let our team help you put together a plan to help make your successful retirement a reality and not just a fairy tale.
Yeah, it's all about the plan. It's all about having that initial conversation. It's about being proactive. And you can do this at no cost, no obligation. 866-668-3625. Call and grab one of our appointments. Again, come in, meet the team at Elevated Financial Management, see how you're doing with your current situation. And that situation might just be sitting on a portfolio. But talk about the puzzle pieces. Talk about the goals you want to achieve in your retirement, and then create that map to get you there. That's planning. And you might be in the boat where you're halfway down the path and you're frustrated. Use one of our appointments for a second opinion. No cost, no obligation. 866-668-3625. Bring in what you're currently working with, and if it's good to go, as fiduciaries, they'll tell you, hey, wouldn't change a thing. But if they've got some suggestions, listen. 866-668-3625. That's 866-668-3625. We've got more Elevate Your Wealth coming up next. Welcome back to Elevate Your Wealth. Your hosts are Mark Stimpson, Casey Elkins, Craig Roth, and Steve O'Flynn. You can find them right here in Seattle. Elevated Financial Management. Again, Elevated Financial Management. They've got 90-plus years experience between these four, and it's all about getting ready for retirement, Seattle. They're certified financial fiduciaries. The website, treat it as a resource, EFMNW.com. That's all letters, EFMNW.com. There are links to the TV show. Our radio shows are in podcast form. Good information on retirement planning and background information on this team as it continues to grow to better serve Seattle. We get into these articles, and I tell you, we just finished up with a little Bitcoin, and now we're going to talk about retirement and not by choice. A lot of people have this idea, guys, that, hey, I've got this certain number in mind. That's when I'm going to retire. But sometimes people don't have a choice. Mark?
Yeah, and this is something that is happening more and more. In fact, Craig's going to share a story here in a moment about this that with a client that he's working with right now. But I love the thought in this paragraph. It said, forced retirement isn't just a financial event. It's a psychological transition, a family shift, and often a grief process. How many talk about this with their current planner? The more we understand why it happens, the better we can walk alongside our clients. And that's really important to us here because we're seeing this more and more. And I love it says forced retirement also reminds us of something uncomfortable, but very true. Retirement planning is never just about the money, the numbers. We can't overemphasize that to those that are listening today. It's about preparing for what's next, way beyond the numbers. What are you going to do? How are you going to deal with this transition? What about family? Where do I want to live? There is so much more to true retirement planning than worrying about just how much money a client has and what type of a return we supposedly are going to promise them. That is, we would put that almost as secondary to a big degree, right, guys? I mean, this is something that truly matters and doesn't get talked enough by other planning firms. We know it because how many of our clients have come in and said, nobody has ever taken the time or asked us any of the questions that you are, asking us about. And I think this can make a true difference. And I think you'd like to maybe share a story of this, somebody going through this right now, Craig.
Yeah, Mark, thank you. And, just before I get into it, I'll remember a show we did a couple of weeks ago about the stages and phases of retirement and preparing for that day when, there's no morning meeting and there's no emails to return and all that. And it's challenging enough when you know it's coming. But when it's all of a sudden a surprise, for the gentleman I'm talking to right now, he thought he'd retire at 67 in a couple of years. Well, he got laid off just a couple of months ago. So now instead of having his company health care for another couple of years, he's considering what to do about Medicare. And he's wondering how he's going to transition that portfolio from trying to grow for another couple of years to making sure his income's going to last as long as he does. And all those other concerns are urgently on the table now without a moment's notice.
Mm-hmm. Yeah, I really appreciate you sharing that, Craig, because we've seen that quite a number of times in the office. And, this is why sometimes you'll hear me say, I might even said it today, about things happening to you, right? So that's kind of what's happening to him, right? Is his retirement is happening to him. He didn't really choose to retire. That was on the horizon. That's always the goal, of course. But now it's kind of thrust upon him, and suddenly this wave of decisions has to be made.
Right. Yeah.
And that really starts to complicate things because, we've talked about this before, but I really feel this is so valuable. When you think about the decisions that you've made in your life, I know for me, the ones that I've made emotionally are the ones I regret the most. And now if you've been forced into early retirement, we've seen it a lot. It's very emotional. You feel like you've been kicked to the curb. You may experience ageism when you go to, interview at other companies and you're not getting the offers that you feel you should get. And in reality, you probably should get, but they go with somebody younger. And suddenly there's a lot of emotion in this moment where the best decision you can make or best decision making that you can have when it comes to retirement is to pull the emotion out of it and make sure that you're really quantifying what you're doing. And that can really mess things up. And so it all comes down to having a plan. Even if you're not going to retire for 5 years or not planning on retiring for 10 years, that doesn't mean that you can't have a plan, because that plan is what gives you the confidence that when you get that paper that says, this Friday's your last day or today's your last day, that you can walk into it with confidence and figure something out, and that you already have a relationship with somebody who's going to help you fight through those details to make sure that you get it right.
How important would it be for our listeners out there? So we don't know when it's coming, this sudden retirement. How important would it be, guys, to maybe stress test the portfolio, what you currently have? What if retirement comes next week? Am I ready for it? Do I have a contingency plan on top of my overall retirement plan? Because, when things are going smooth, we don't think about these things. But then all of a sudden, you're suddenly retired, but stress testing the portfolio.
Yeah, and we say the retirement red zone. If you're kind of 3 to 5 years outside of retirement, you're in the retirement red zone. And that's the chance to really come in and speak to a financial professional and plan for that. Because the unexpected could happen.
It is, yeah, and that stress test is really important. That stress test is very, very important because when you add 3 years at the beginning of your retirement, that's 3 years less of growth on your accounts. That's 3 years less of contributions. That's 3 more years of inflation. That's 3 more years for healthcare to increase. It really does start to increase your exposure, and that can really start to mess things up, right, Mark?
Yeah, in fact, we've shared this story, but a lot of listeners may never have heard this, but we have a Boeing client that basically wanted to work about 3 or 4 more years. The door blew off the plane. We all know what happened. Boeing stock plummeted. He had put everything in Boeing stock in his 401k plan, lost close to 60% of what he'd worked 44 years. But the story, like what we just talked about, it is something we don't want to see happen to other individuals, because not only was he planning on working a few more years, but he lost that huge chunk of his retirement. But then, right after the last strike got settled, he ends up getting laid off. Mm-hmm. And totally what we're talking about here, it was totally unexpected. And now he had 60% less in his retirement account, and it major league affected the family. The wife was distraught basically when she was in our office. So again, if you don't have a plan and these unexpected events happen, they can be traumatic. And boy, oh boy, we don't want people to have to learn from the school of hard knocks. So if you've got a plan that's really set up right, if the market does not perform the way we need it to, your plan is still going to be successful, whether the market does good or the market does bad. That's the point, and that's what we want to set our clients up for, is real retirement success.
And gaining that knowledge, and knowledge, as we say, is power. And one of the things that Elevated Financial Management has done, and guys, you wanted to put this out, so you've done it. Break the Glass. It's a nice retirement kind of a encyclopedia. I mean, you can read through this. It's an easy read. We offer up the book, and it is complimentary, but this is a great place to start, just to kind of get that information. BreakTheGlassBook.com. That's BreakTheGlassBook.com. Go there, sign up. They'll send it to you. It is complimentary. But Casey and Mark, just talk a little bit about the impetus behind the book. I mean, you said, you know what, we want to put this out.
Yeah, this is something that we were really excited to put out, and it was written specifically with the intent of being different from most of the other books that are out there when it comes to retirement planning. Again, I think it's interesting how a lot of these books, although they're supposed to be for the retiree, often it feels like they're written for the other advisor sitting in the room. And that really just doesn't make a lot of sense, because there's a lot of jargon. There's a lot of financial terms that people don't use day to day. And it really just goes over people's heads. And that's just really not necessary, right? And so the book is meant to be palatable and digestible, and something that you can enjoy reading and be educated about what's coming and what you need to be cautious of. In reality, almost everything we talk about on the show is in the book. And there's a reason that is, because that's what people need to have a confident retirement. So again, it's breaktheglassbook.com. It'll come in a golden envelope like Willy Wonka's golden ticket. You won't be able to miss it. Yeah. And that'll be your golden ticket to retirement. So please visit the website and check it out. Something you wanted to add, Steve?
And also, we're starting to get some really nice feedback from people that have taken advantage of going online, getting the book and reporting back to us. I know, Craig, you have the same. It's people that are saying, hey, this has been so valuable to us. Thank you so much. And also passing it on to family members.
Right, absolutely.
I just want to say, too, that another wonderful tool that we share with our clients is taxbillseattle.com. I want to repeat that, taxbillseattle.com. If you want to go there, you can add or put in your tax information, and you might be amazed at some of the information that you'll be able to pull out, whether maybe Roth conversion makes any sense. So again, that's taxbillseattle.com.
Okay, it's important. Be on top of this, and there are plenty of things that you can grab today on the show as far as resources. You just heard Mark say just a nice website, a tool that you can use for free and get your numbers in there, and you'll have a pretty good idea. That's taxbillseattle.com. And we have also promoted the book. Get a free copy. Just go to breaktheglassbook.com. That's breaktheglassbook.com. Sign up there. They'll ship it out to you. It'll show up in a gold envelope. You can't miss it. breaktheglassbook.com. All right, gentlemen, we've got spots on your calendar. We want to open those up right now. These are cost-free, no obligation.
These are really an opportunity for you to get a written plan, to get a financial plan, right? And that's really what this is all about. The reason that we're here talking on the show, the reason we do the TV show that we teach at the local colleges, the whole reason behind we wrote this book all comes back to education and empowerment so that you know what to look out for and you can have a plan written just for you in your retirement. So we'll talk about the taxes. We'll talk about if crypto makes sense for you, what to do for Medicare, what you can do in terms of estate planning. So this, again, your opportunity to get a written plan. Don't hesitate. Give us a call.
All right, jump on it. 866-668-3625. Call that number. Sign up for one of these complimentary, no obligation appointments with Elevated Financial Management. 866-668-3625. That's 866-668-3625. When we return on Elevate Your Wealth, it's time for scenarios. We'll throw them at the team, see what they come up with. Welcome back to Elevate Your Wealth, hosted by our team at Elevated Financial Management. Mark Stimpson, Casey Elkins, Craig Roth, and Steve O'Flynn. 90-plus years of experience between these four, helping hundreds of their clients get ready for retirement. Certified financial fiduciaries. I'm Morgan Patrick, and I'm just along for the ride. It's all about knowledge when it comes to retirement planning. It's all about being proactive. So you're going to get an opportunity to get on the calendar with Elevated Financial Management. A complimentary appointment awaits if you call the number 866-668-3625. That's 866-668-3625. All right, scenario time. Craig, you're up first. Here's the first one. Their 401k took a hit in the past year, and they're trying to figure out if they should lower their withdrawal rate from 5 to 4%. Or just go ahead and ride it out. How should someone in their mid-70s think about adjusting withdrawals during, say, a market slump?
Wow, Morgan, there are like 3 or 4 points in that short question that we try to address every time we sit down with someone. First of all, that withdrawal rate, 5%, 4%. If you go back over the last few decades, it's been coming down, 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 down. And we talk with folks about, if you need $100,000 in income today, and you're going to reduce that down to, 4% or 3% in 20 years, who among us wants to take that kind of pay cut when we're 80 years old, right? Nobody. The next thing was, your 401k took a hit and you have to make some changes. You have to decide what to do. No, that's too late. We want to decide earlier, beforehand, ahead of those things, and let the world catch up to you. And then finally, how should someone in their mid-70s think about adjusting retirement or adjusting withdrawals during a market slump? If you're in your mid-70s, you want to have a market slump occur and then turn to your spouse and say, what would you like for dinner? That's the sort of thing that we try to do.
Yeah. In fact, I wanted. That's such a good point. Moshe Milevsky believes that the older we get, everything should be on automatic pilot, right? I think that's important and make fewer and fewer economic or financial decisions, right? If we do that, we want it to be set automatically, and I think that's really a key thought here because if Bill Bengen or William Bengen, he was really the grandfather, the daddy of that 4% drawdown rule, right? He believes this year, he just came out with a study, believes that can be upped to higher, 4.75. Now, there are many in this world that would refute that, right? Because again, the more we take out, the more we got to have returns. And if that market does downturn at the wrong time, that heavy of a drawdown rate could end up being a disaster. So again, there's a lot of opinions about this, and I know we talk about it all the time at our classes, don't we, Case? Sequence of return risk is something every listener needs to be very, very concerned about.
Yeah, and we also would say you're in your 70s, and is it really still in a 401k? Is that where your investments are? Typically, if you've separated from employment or you're aged over 59 and a half, you would roll that into a traditional IRA. You would have more options available to you than you would in a 401k. So we would look at perhaps saying, hey, have you considered moving into an IRA and just having way more control of your investment?
Right. And, to add to that, I think, too, the other piece of this is if you're in your mid-70s and your withdrawal rate's at 5%, you're considering to lower it to 4% because you've lost some funds, things like that. What you might really want to consider is reviewing how you're invested, right? Because that really might be the crux of the issue here. If you are invested the right way, all of the rest of these questions really don't matter. And so I think the actual base issue of this is how you're invested to make sure that you can deal with a market downturn. Because it's no surprise that one is coming.
Right.
What we don't know is when, right? So it's not if, it's when. And that's really the big key here. And so if you're planning for a 30, 35-year retirement, because people are having 30, 35, 40-year retirements, if that's the case, you need to be planning for a potential downturn or 2 or 3 or 4 in that time frame, and make sure your investments are set up in such a way that your life continues on regardless of what happens.
Maybe the warning light just went off. You're thinking about your portfolio, and you really need to have a balance done, take a look at it, see how much risk you have, where you are on your time horizon. If that thought crossed your mind, grab one of our complimentary appointments right now, 866-668-3625. Come in, bring the portfolio, and they'll take a look at it. And if you need to change directions, that conversation can be had. Again, 866-668-3625. That's a complimentary, no obligation appointment, and see if you're on track. See if that portfolio where it needs to be as far as your time horizon for your retirement. 866-668-3625. All right, so Mark, I'm going to throw this one at you. They're looking into, and guys, just jump in on this when you want to, they're looking into Medicare Advantage versus traditional Medicare, but the fine print is overwhelming, and their neighbor keeps pushing their favorite plan like a used car. What is the best way to make a confident, unbiased choice without overpaying for your health care?
Well, the choices about Medicare can be some of the most stressful and what do I do questions. Everybody's concerned. We were talking about that a little bit at our morning meeting this morning. And so there are choices that need to be made. And sometimes it's not easy because we know there are ones that with a yellow pad, right? A pro and a con. And when I get on both, you have to be on Medicare A and B to be able to decide at that point, do I want to go on a Med Supplement plan or a Med Advantage? And the one thing I would say, now I happen to have chosen, I went on a Med Advantage plan because I'm fairly healthy. I don't go in very much. And so I like not having an additional premium. The one thing I would say about that is there's pros and cons to that. You have to use an in-network system if you go Med Advantage, right? Now, Med Sup is going to give you more choices from a doctor's standpoint, but you also are going to have to deal with the premium. Anywhere, if you include the Part D, you're going to be looking anywhere from probably $225 to $300 a month. That's separate from your Part B premium. So it begins to get more expensive. So there are a lot of choices, and we do have time frames to deal with. I know annual enrollment just ended December 7th this year, and that is what people had to pick for their plan for 2026 this year, right now. So again, this is a complicated field, and we have a whole back office that'll help us figure this out. And you want to be making the right decision based on your individual circumstances.
It really is individual. It's just like the financial planning that we do here. It's not a one-size-fits-all. And I really appreciated the idea here that the neighbor keeps pushing their favorite plan like it's a used car, because we see that all the time, right? It's like, well, I got a Med Advantage. This is the greatest thing that you could ever have, right? You really got to get a Med Advantage like me. And it's like, well, no, hold on, right? Everybody's health is different, and everybody's ability to afford different things is different, and what coverage they might have from their employer.
Travel.
Travel. There's a lot to it, right? Do you want the doctors that you currently use, or are you open to using new doctors, right? So for those of us, my wife is not in the greatest of health. She has some chronic conditions that she deals with. And so making sure that when we pick a plan, the doctors that we currently use are in network for that plan is very, very important. And Med Advantage does not work quite like that, right? So there are some details to this. Now, Med Sup, more expensive, but it might be the right thing for you. So, it's really hard to say. And Mark, if you touched on this, I apologize. But I think it's important to note that if you pick one plan and then the next year want to switch to a different one, they do not have to take you. Right. So they can force you to go into underwriting. So the decision that you make up front is very important to this overall picture, again, about making sure that it's the right thing in your circumstance. And, it's nice to think that we can use Google and get this information, and ChatGPT will tell us everything we need to know. But the reality is that's not customized. It's not tailored, and it doesn't account for all the little gotchas that come up when you're doing this type of planning. And so it's important to make sure that you have the conversation.
And in our meeting this morning, the gentleman that's had his retirement hand forced early, Craig,
Yes.
Medicare was part of that decision-making process, and now we have to walk him through and help him with our team to make that choice.
Right, exactly. And, that was a great quote from the article that Marianne had written. She said that, a good advisor is going to walk beside you when you're making these decisions and help you as if they are your friend.
Yeah, that I can't overemphasize the importance of that, right? Because we talk to so many people where they might have a so-called advisor, but when it comes to some of these very specific things, Casey just mentioned one. If you got to go through underwriting because you made a choice to go with Med Advantage and now you want to switch back to a Med Sup, that can be an issue. And if your health doesn't allow you to do that, they're going to come right out and say, nope, we're not going to take you now. Now where are you at? So what you do at the beginning, it's kind of like with a pension. The options that you take, whether it's a single life option, a 50% spousal, 100% spousal, these decisions sometimes are put in cement when you make them, because if you make a wrong one, there's no way to go back and fix it, right? You're stuck. And so you better be making a decision that you're going to be comfortable with.
Yeah, and that's a big surprise, right? That's a real big surprise. If you thought, well, I'm going to be on Med Advantage because it's lower cost up front, and then if I start to have some health complications, I'm going to switch. And then to be told, no, you can't switch, and you're stuck where you're at, and you're dealing with the cost associated with it, which is maybe higher than what you could be. That's really where things start to become a struggle. And so this is where it comes down to having a conversation to make sure that you know what the right thing is just for you.
Yeah, so if you're worried about maybe what do I do with Medicare? What do I do with my income planning? Please pick up the phone and we're going to have a conversation. That's it. You leave your checkbook at home. Maybe you're retiring from Boeing. If you saved at least $250,000 or more, these strategies are going to be best for you. But again, we just want to have a conversation. So please pick up the phone. Let us help you. You never know what you might learn. And our whole goal is to make your retirement to be very, very successful.
Tell you, it's about having a plan. We talk about it each week, and a complimentary appointment awaits you right now by calling 866-668-3625. Come in and talk about your own retirement scenario, because it's custom to you and you need a customized plan. 866-668-3625, the number to call. Again, complimentary appointment awaits and no obligation. 866-668-3625. Another edition of Elevate Your Wealth, powered by Elevated Financial Management, right here in Seattle, in the books. For Mark Stimpson, Casey Elkins, Craig Roth, and Steve O'Flynn, I'm Morgan Patrick. We'll see you on the radio next week.
Investment advisory services offered through Foundations Investment Advisors, LLC, an SEC-registered investment advisor. The content provided is intended for informational and educational purposes only. The views, statements, and opinions expressed herein are those of the individual speakers and not necessarily those of Foundations and its affiliates. The information contained herein does not constitute an offer to sell any securities or represent an express or implied opinion or endorsement of any specific opportunity, offering, or issuer. Any discussion of performance or returns is not indicative of future results. Each individual investor situation is different, and any ideas provided may not be appropriate for your particular circumstances. Foundations only transacts business in states where it is properly registered or excluded or exempted from registration requirements. Registration as an investment advisor is not an endorsement of the firm by securities regulators and does not mean the advisor has achieved a specific level of skill or ability. No legal or tax advice is provided. Always consult with a tax professional. All rights reserved.